Welcome. Here we come to the top most likely issues that Batton bicycles may face within your unseen exam based on the pre-seen material. I'm Sandy Hood and we are preparing for the May 2015 exam. The basis of my choice has been that the focus that has been given to it within the pre-seen, so how much space has been allocated, how much of an importance is the examiner attaching to it, and how can he fit it in with the syllabus, and then the strategic importance, the importance of the SWOT, the importance that's likely to be attached by Jim Batton, the new managing director, and my own experience based on past exams. We haven't had case studies at this level, but we've certainly had 25 mark questions which have been 45 minutes. And when you think that the majority of the exams that will be at operational case study level will be made up of 4 45-minute questions, I think those past exams on the earlier syllabuses will be appropriate for me to use. And the typical issues that are tested, and also how easy it will be for the examiner to write questions on them. The way that I would guarantee you to prepare is to look at the key models from the pre-seen information, and on the day of your exam remember to adapt these models for any new points that have come up in the unseen on that particular day. I think you should use the practice mocks. The strategy practice mocks are very good and have been written by a number of people, so they don't all come from the same sort of mindset and way of thinking. I think that that's also very useful. And then find out what real life companies are doing about these issues. Certainly in my research I've come across a couple of bicycle manufacturers in the UK who seem to have rather similar scenarios to the one that we're looking at with Batton and Jim Batton. And then learn about typical key points, the advantages and the disadvantages, and then be prepared for which models to use to support the issue that you may well face within your exam itself. So, number 10, without further ado, we are looking at a sequencing of production. This is very much linked with throughput accounting and marginal costing. They have got, at the moment, a very old absorption costing system that we've identified, 50 years old, and as such the inclusion of overheads in the costs of the products is something which doesn't suit the modern manufacturing scenario. So we may need to look at a different way of treating overheads, quite possibly looking at them as fixed costs and taking them out of the equation. And if we're doing that, then we may well be able to find a better way of using our capacity. So here we've got a capacity problem, we've got an old-fashioned absorption costing system that isn't really helping. So why did I choose this? I think the sequence of production may lend itself to a marginal or a throughput approach rather than using absorption costing. And as throughput has a focus on the bottlenecks, I identified that fettling could be a bottleneck where 20 frames at a time are put into a mild acidic bath that then helps them to prepare the bicycles ready to be painted. And then at the end of each day, the daily output is then baked to dry the paint and lacquer onto the frames. So these are two quite possible bottlenecks within the manufacturing scenario. What would a good answer do? It would need to raise points about this. So we would need to identify the bottlenecks. And sure, the unseen material will help you with that. And it might not then tell you what to do next. So you would need to be basing your production around what you can produce at the bottlenecks and basically keep the bottlenecks as busy as possible. And at the same time, the examiner will be looking to see that you can accept idle time at the non-bottlenecks, so that in order to avoid a build-up of part-finished products at a non-bottleneck, it may be acceptable to have a little bit of idle time there and to make sure that the focus is on the bottleneck and the throughput at that point. So the models that we could be using for this type of question would be marginal costing and throughput accounting. On to number 9. Number 9, we now move across to the E1 syllabus and human resources. A little bit of a sort of upside down justification for this one, but HR is hardly mentioned in the pre-scene. In some respects, I think I pointed out earlier that because there wasn't a lot of job turnover, the people who are working in the manufacturing areas have been in their jobs for quite some time. There may not have been a need for an HR department. But now that Jim Batton wants to make changes, and one of those changes may be that he wants to move away from the rather authoritarian approach that his father seems to have had. I mean, it isn't overtly stated, but it is hinted at that Jack Batton may have been quite an autocratic manager. Then he may need to have an HR department to help him with those changes. So changing direction of the company will involve managing the staff's expectations. And so we would be looking for skilled production staff are currently a critical success factor. They are vital to the business's success. But if we're going to be looking at new things, one of which could be new equipment, then we might need to be looking at training schemes to enable staff to use that new equipment. And within that, you're going to have downtime perhaps, and an HR aspect that helps in that management. And then looking at the E1 syllabus, I reminded myself that there was this element where we had to show the distinction between what HR managers do in terms of the HR plan and what line managers do in terms of the HR plan. And just to add a little bit to what's on the slide, in past E1 exam papers, that has been tested on more than one occasion. So it would come as no surprise to me to see the introduction of an HR aspect and then for someone to say, and what would the role of the two production managers be in this respect? And you'd be expected to show that they don't take a step back, but they are very active alongside the HR people. The models to apply, the HR cycle, and aspects to do with motivation. And the one I've chosen is the Hertzberg one, the hygiene motivation factor, because I think that that would fit in quite nicely. So we've been looking at the different contributing syllabuses, and tax is the F1 aspect. And here I'm looking at the idea that Batton are likely to be acquiring new machinery and equipment, and as such there may well be questions about how this would affect them from a tax point of view. So the basis of this choice is that it would be a very suitable finance assistant explanation type question, and the explanation of why tax is calculated based on taxable profit rather than accounting profit is something that's difficult for the E1 examiner to assess, because within the multiple choice questions they are rather restricted. So as that has to be tested, then the case study looks like the medium that they are likely to use. A specific section in our pre-scene was dedicated to the tax regime within country Y. So that sort of gave me a bit of a hint. And I did some comparisons. I can see that from the financial statements that Batton is using a 20% accounting depreciation approach, and obviously within the tax regime they are told to use a 25% tax depreciation on the reducing balance. So immediately you've got the opportunity there for a calculation to be presented that you would then have to explain. Remember, this is not an exam where you would be expected to do extensive calculations. In fact, CIMA have said that you can be quite successful with no calculations at all. But you do need to be able to explain them. So the key points that you would have to raise within an answer will be that you have to follow what the tax regime is in country Y. And if there are new factors, and there almost certainly will be, then you have to link these within the regime rules. So the new things are going to be the acquisition of equipment and machinery. The rules aren't going to change because they are going to be static, because this is the country Y rules. And the models that you can use are the principles of corporate income tax and the concept of rollover relief. Now, I didn't mention that earlier, but as you can imagine, if they are, say, disposing of their curing oven, then they may well have, at that stage, balancing allowances or charges that they can then roll into their next acquisition rather than having to pay up the tax there and then.